So what is your outlook for M&A, especially after we got a more hawkish Fed, which seems to be poised to stay higher for longer?
Well, we're coming off a great 2024. So we were able to deploy a lot of capital and realize $9 billion last year. And now with what we're seeing from the Fed, we're even more optimistic about what's going to happen next year.
Why?
IPO markets are open. Interest rates have stabilized and are coming down, maybe not as fast and as much as people would have liked, but we've got stability. The business community does like that there is a business-friendly president that's going to be in the White House. There's going to be some unpredictability around that, but we're going to be on our toes, and we're going to see what comes in 2025.
What are you expecting from the incoming Trump administration? We're talking a lot about regulation, but also about trade, tariffs, tax policies, immigration.
Look, there's a lot in that question. What we do know is we've got somebody who wants to support the business community, to deregulate, support M&A. That's the lifeblood of our business. So we're excited about an M&A environment. We're also excited about something that he can't control, which is the IPO markets, which feel more open today than they have been in the last few years.
You guys like to focus on transformation and acceleration when you're taking majority stakes, particularly in transformation. When you look at AI, you've talked about customer service as being one area where you see the potential to transform. What are you seeing in sales? What are you seeing in other areas where you think, with your focus or your expertise, you can boost these businesses up pretty quickly and add more value?
Well, you nailed it. The way we see it is the opportunity is in our portfolio companies. We're constantly looking for tailor-made value creation plans to help drive growth. Each company is going to be a little bit different. We've got an in-house team that focuses on AI and use cases within the portfolio, whether it be in sales, automation, or otherwise. And it's never going to be a one-size-fits-all approach. We got to find that right mode of operation for each of the companies.
So how are you handling the question of how much the company should be spending on the infrastructure, the resources it takes to be able to, deliver that AI acceleration?
That is a great question. Because we view ourselves as great collaborators with our portfolio companies, it's a give and take. We're not going to impose upon them the answer to that question. They're going to bring to us the best ideas, and we're going to iterate as we do in a partnership to figure out the best answer that we can come to together.
Now, I've gotten to know Advent through the acquisition of Maxar, but you have quite a portfolio, to your point, across a number of industries and sectors. Healthcare is a big area for you. So how are you thinking about investing in healthcare, particularly at a time where, perhaps in part due to this tragic murder that we saw of an executive at United Healthcare a couple of weeks ago, there is a lot of talk about how the healthcare system in the U.S. needs to be thought of, reformed, changed?
Well, there's a lot to unpack there. Well, let's start with what happened a few weeks ago was a tragedy, husband, father of two. But it does speak to there's a lot of animosity toward the healthcare system and to some extent private equity in the system. For our part, the way we approach it is we want to do well by doing good. We're only going to invest in healthcare business models that are good for providers, good for patients, good for outcomes, and ideally do it at a lower cost. We really use this mantra of you can only do healthcare private equity investing if you have the intention of doing well by doing good.